You ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Tuesday, 6th day of July, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of your office, away from your desktop, just point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel. That's youtube.com/CFRN. Easy to remember. youtube.com/CFRN. Not only do we stream live, but we archive each and every daily show. Currently, there are over 1,700 daily live broadcasts archived there for your viewing and educational pleasure. So with that, we'll open with a word of prayer. I hope you all had a great holiday weekend, Independence Day, 4th of July. Good time to be thinking about the freedoms that we have enjoyed since the founding of our great nation, and what a tenuous grasp we seem to be having of late on many of those freedoms that you and I grew up with. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. Help us to remember that not one day of our lives is more or less important than the other. No one person is more or less loved than the other. In your perfect way, you hold the world in balance and our souls in tune. You hear every voice, every prayer, every cry, and every shout of praise simultaneously and always. Your ways are not our ways, but oh God, we pray that you would lead us in your purpose for our lives. Let your glory, light, and living water flow from our lives. May all who know us feel the love you have for all and the care in which you save the lost. And it's in Jesus' name we pray. Amen.
Amen.
Amen. Okay, let me give you the numbers from around the world. These are the cash markets, the indices as they're called. Starting here at home in the U.S., the Dow is down 352 points. Historically, we rally into a holiday weekend, and then historically, get some of this. So the Dow's down roughly 1% on the session, which began last night at 6 p.m. Eastern. NASDAQ is down 46. S&P 500 down 29. The Russell 2000 down 37. That's a drop of over 1.5%. In the commodity basket, crude oil down $1.64, trading 73.52 last. It's a drop of over 2%. Gold up $13.90, trading 17.9720 last. Silver down 28 cents, trading 26.21 last. That's a drop of a little over 1%. In the Asian markets at the close, Nikkei posted a gain of 45 points. Shanghai fell 4. The Hang Seng dropped 70. So no movers, no shakers in Asia. In the European markets at the close, FTSE was down 64 points, almost 1%. The DAX was down 150 points, almost 1%. And the CAC down 60 points, you guessed it, almost 1%. So that gives us a mixed day in Asia, only due to the Nikkei. It is a red day in the UK, and so far it is a great big red Radio Tuesday here in the US of A. So with that, we'll go to Michael, and he'll give us a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll talk about a couple things. We did have alerts over the holiday. I did not put out any concierge trade alerts last night. So we'll still take a look at the different charts, see where the markets are, find some windows of opportunity. All that and more when I return. Michael, I can see your chart. It's all yours.
Great. Thank you. Thank you. All right. Here we go. Good afternoon, everyone. Today is Tuesday, the 6th day of July, 2021. If you've not taken a free trial with us and you'd like to, go to the homepage here at cfrn.net. On this page, all you have to do is scroll down to right here where it says free 5-day trial, no credit card required. Click on that and be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. Tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent to confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial, so you gotta make sure you click on that link. All right, recaps. All right, so we had a pretty good day today. Market started off, there was a lot of volatility. You know, after the doji we had yesterday on the daily chart, I had a feeling today was gonna be a good day. And selling off right after the holiday is a good thing for us. Anyway, if you're going to read the spreadsheet, you got to read all CFTC risk disclosures down at the bottom. Today is the 6th day of July, 2021. Today we made 54 ticks in crude, 43 ticks in gold, and 14 ticks on the ES. Put us up $1,145 a contract this morning. Today it took 2 minutes and 1 trade to get the goal for the day. It wasn't really 2 minutes. I was like 2 minutes late. It took like 30 seconds and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 30 trades today. So we took a bunch of trades today. There was a bunch of opportunity today, and I didn't even take them all. So on the month now, we're up $2,135 a contract. That's over 3 trading days, averaging $711 per contract per 2-hour trading day. We've now gotten our goal for the day on 126 out of 127 days. And on the year now, we're at $83,025. That's over 127 trading days, averaging $653 per contract per 2-hour trading day. Okay. All right. So let's get into what we did and didn't do. Now, we had a bunch of trades today. So I'll start out with the ES because we had some great movement on the ES and it was doing pretty much everything we wanted it to do. But we only took a few trades on it. Let's see, we started out here. Our very first trade on the ES was here. We picked up 2 ticks on that. Followed up with a break even. Now we said it was going to get down here and it did. We said it was going to get down here and it did. Then we took another trade right here and I said it was going to get down here and it did. We picked up 2 points on that to put us at plus 10. Went down to the zone. I was looking for the bottom level of the zone here, 43.31 at that point. And it took it a while, but it eventually got there. And then we got back into the ES and we were looking for it on the other side when it started to bounce off of this weekly trading zone. we missed this trade right here. This was the pullback number. It pretty much got up to it. And then I was looking for it to get down here to the zone. And if it got through the zone down here, you can see it's gotten down there now, but it took forever to get down there. Once it bounced off the zone here, we had a literal bounce off the BBC right here with good separation, and the cycle was blue. So we took that trade and we ended up with, what did we end up with on there? 2 more ticks to get us to plus 12. And then it finally did get through the BBC, and it gave us another shorting opportunity right in here that we took. And we took 2 more ticks on that to get us to plus 14. Okay, then I had put in one last thing here that I thought it was going to get down to, and it did. And then I got into the break. Now, I didn't really do anything for the break here, but it doesn't look like there was much going on. All right, so next I will do crude. Now, crude is where we got our goal for the day, and we got it right at the open. Right here, I saw this was dropping here, and I missed this piece right here because I was a minute late, but I saw we had this pullback, and the MA1 didn't waver whatsoever. So I jumped on it as soon as it closed down. I jumped on it and I picked up 10 ticks profit for the goal right there. So that took 9:31.44 to 9:31.53. So it took about 9 seconds really. It wasn't 2 minutes, but nevertheless, that is what it was. Then the slingshot was all messed up for a little while. Then we started taking little bits here. On crude, we ended up with +3 right here. Then a break even. Now this trend line is randomly thrown here because it used to be down here, but I wanted to illustrate for everyone that this was actually a bounce off the BBC where the MA1 stayed the right color and the cycle was the right color. We had great separation. So that right there is a high probability trade. It's our highest probability trade, as a matter of fact. There were a couple of times today where we had bounces off the BBC, 2 in a row, one of them being the highest probability trade, and the next one with the MA1 changing color. But still a bounce off the BBC with the cycle the right color, 2 in a row on different markets today. There was one here, happened once here on crude and once on gold, I think. Anyway, so at this point, where were we on crude? We're plus 13. Then we picked up 5 here to go to plus 18. We're break even. Then we stopped out, put us back down to plus 10. We missed a trade here. Had a break even there. I only got a break even out of that. It gave me like 6 ticks, but I was doing something else. Picked up 3 here to get us to plus 13. I missed a trade there, missed a trade there. Those are both nice trades, and that is what I was talking about. See that one right there, bounce off the BBC. Cycle red, MA1 red, then another bounce off the BBC. Cycle red, MA1 change color. But they were both good trades, both valid trades, and both bounces off the BBC. The next one here, we picked up 1 more tick to put us at plus 14. Then we had a big trade coming up here. We missed this one. We had a break even on that, and we made 30 ticks on this one to go from plus 14 to plus 44. Picked up 30 ticks on that trade. Missed that one, had a break even there. 10 more there to put us at plus 54. And we had a break even right in there. Okay. Okay. Yeah, I'm trying to reply to you, D, but I'll just say okay. All right. So he's having a technical snafu, and Valerie's not here to back up anything, but I'm doing the recording right now. So if you guys all have any questions, you know, just to type them in the box, right? Hang on, let me fix this. There it goes. Okay, yeah, you know, just to type them in the box if you have any questions about anything. Okay, so that was the last trade that I took in the morning session. Now let's see if we had anything here during the break. Well, we had a pullback to the BBC right here, but the cycle was the wrong color. So I'm not sure that I would have done anything with this. Broke dynamic support in here. I don't know. It would have been way down here is where the trade would have been. Because if you see, I'm just going to take my time now because Dwayne said he's going to be a little bit, he's having a technical problem. But you see, the trend line would have originally been like that. Now right here, the cycle was the wrong color. So then the trend line starts over again like this. So the cycle's still the wrong color. So then the trend line goes like this. All right, now price hit the BBC there, so your entry point would have been right here. All right, and we go a little further over here. This right here was, and let me close that thing. This right here would have been the trend line over here, and so you would have had a nice long trade right there. Over here, you would have had a bounce off the BBC. Now this one right here, you see the cycle and the MA1 stayed red, okay, on this bounce off the BBC right here. Highest probability trade right there. And you know, I keep saying that again and again, but this one went from 58 down to 50. So there were 8 ticks possible on that particular trade. Let's say you had a bad entry and you get in at 57 or even 56. You know, you still had time to make up something there on that trade. Okay, so then it went up. We didn't have a trade set up here. Came back down. We didn't have a trade set up here. Pulled back up. No trade set up because the cycle's going up too steep here. Okay, so then it goes into here. Cycle's still going up too steep. And the slingshot is just going to keep you out of this mess right here. When you see something like this, just get up and walk away, or do this. Ding. See how easy that is? And come back to it a little bit later. But now I gotta find my crude chart. Hang on. GCL. Give me just a second. That's my DOM. Nope, that is the wrong chart. Give me a second, I'll find it. GCLQ, here it is. Oh, that's GGCQ. Oops, wrong one. Anyway, we'll do gold now. We'll jump into gold. We ended with plus 54 on crude. Okay, and look at all this movement during the break in gold. Wow. All right, let's go back to the beginning here. Now, the very first trade on gold was right in here. There was a long trade off the BBC where the cycle stayed blue. Cycle stayed blue, the MA1 stayed blue. Highest probability trade right there. And it was followed up by another bounce off the BBC where the cycle was the right color. See, this is what I meant when I said there were 2 in a row. And in this case, the MA1 had changed color right after, but it still gave a decent trade. Our first trade here on gold was right there, and we picked up 10 ticks on that one, it looks like. The next one we picked up 4 to put us at plus 14. It says I picked something up there, but I don't have it written down. Then picked up another 4 here to put us at plus 18. And then it says 1 somewhere to put us at plus 19. And then 5 somewhere. This might have been the 1 for 19. This might have been the 5 to put us at plus 24 or something like that. And then we went to 25. So there was another 1 somewhere to get us to 25. Then a 5 to get us to 30. Then a 2 to get us to 32. Break even. We missed this trade here. Now this one was a bounce off the BBC. Cycle was good, going down nice and steep. The MA1 had changed color on the entry on this one, but it was still a bounce off the BBC that worked out really well. And this one here, we picked up 10 ticks to put us at plus 54. Okay, and that was it for the morning session. But let's scroll all the way over here and see right here. That's the trend line right there. Now you see how the cycle has got great separation down here, and the cycle's red and going down pretty good. That right there was a nice trade to take during the break. It was followed up right here. Let's pull this up a little bit so you can see it a little bit better. Followed up over here by this down close. Oops, I moved it 1 too far. Again, there we go. By this down close right here. that went a few ticks into profit, and you could have gotten 3 or 4 ticks out of that. Now Scott, is Scott in here? No, Scott is not in here. Okay. Anyway, see right in here, I was just thinking about with Scott following the MA1. It was there. But anyway, in here, you couldn't have taken a trade in here because we had dynamic support right here that had not been broken. I guess you could have taken this trade right here because it was above the MA1, so you could have gone short right there for that. Then once we broke it, you could have taken another one right here, 4 or 5. You could have taken this right here for a good 10 or 15. Then it moved all the way over here. There was a bounce off the BBC here. The MA1's the right color and the cycle's the right color. So right here, highest probability trade. And that was good for, well, let's see, 96.3 down to 95.2. So 8 or 10 ticks right there, possibly. And that was followed up by this one right here, good for another 6 or 8. Still moving across here. I'm looking down here at the slingshot right now, and you see how the slingshot is going sideways. Well, the cycle's going sideways, and it's not at the bottom and it's not at the top. When it gets like that, it's usually pretty messy trading. You really want to stay away from that. Okay. And when you get back all the way over here, hang on. I'm trying to give you a thumbs up too, but I somehow did something wrong here. But okay. I'll just say okay. There, hey. Yeah, it showed it to me. All right. So then you get all the way over here. And you can't do anything here because, well, the slingshot's not letting you, but we had to break this dynamic support, which we did right in there. Okay. And that was the trend line. This would have been the short right here. So that would have been a break-even trade. Now it's flipped around and it's trying to go long right here. I'm not looking at the DOM right now, but if I do look at the DOM right quick, let me see what I'm seeing. It looks like it wants to get up to 93.6, then 94.2. Okay, so the first spot it wants to get to, I know it's not very far, is right there. And then the next one is, and it's, the next one is not very far either, but it's something. All right, so the pullback area is right here at 92. 92. Now we're bouncing off the BBC here. The cycle is still blue. And on an up close, the green line will be going up. So right there is a long trade off the BBC from 92.5. And look for it to get up here, which would be an 11 tick trade. And then look for it to follow up to here. I don't think it's going to do it all at once. I think it's going to get up to here and then probably pull back. See, it got right up there to the tick. Now, I would look for a pullback and then another run up to here. Okay. The problem is going to be on the pullback. Are you going to be far enough below the MA1 to take the trade? Because we have unbroken dynamic resistance right here. Here's the pullback that I was talking about. And the pullback number should be 92.4, which would be enough below the MA1. Okay, 92.4 right here is around where the pullback should go to. If it goes further, the next number is right here at 92, and that'll change the whole trade setup. Okay, but this is how it's all coming together. Okay, so I see some people out here that I haven't seen out here in a while. You may have been out here, but some guys who have been longtime partners. It would do you guys good to come into the live room in the morning, I think. So I haven't seen you in there in a while either. If you want to get in there, send me an email at tech@cfrn.net. Send it directly to me at tech@cfrn.net, and I'll get you in there. Okay. All right. Anyway, that's what's going on right now. With that, let me go over here and go over the spreadsheet. Again, if you can read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 6th day of July, 2021. Today made 54 ticks in crude, 43 ticks in gold, and 14 on the ES. Put us up $1,145 a contract on the morning session. Today it took 2 minutes and one trade to get to the goal for the day. At that point, $100 a contract, and we took a total of 30 trades this morning. So on the month now, we're at $2,135. It's over 3 trading days, averaging $711 per contract per 2-hour trading day. On the year, we've gotten our goal on 126 out of 127 days. That puts us at $83,025 per contract. That's over 127 trading days, averaging $653 per contract per 2-hour trading day. Okay. If you've not taken a free trial with us, go to the homepage here at cfrn.net. On this page, all you need to do is scroll down to here where it says free 5-day trial, no credit card required. Click on that. Click on that. And be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent to a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial, so you gotta make sure you click on that link. All right? All right. And with that, I think Twain's is probably all the way back up now, and we can pass it back out to Studio A. Fabulous, Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I'm ready. Recap of the recap.
Today it took 2 minutes and one trade to get to $100 per contract.
2 minutes, one trade.
Yes. Yes,
Good
indeed.
job.
Thank you. Thank you.
I posted a chart last night in the discussion group. You might have an interest, Michael, in this. Just take me a second. I'll bring it up. And I bring it up because the slingshot actually comes into play. Last Thursday night during the Partners Workshop, we talked about, you had brought up the previous week volume charts, which we used to use, and of course everybody's probably used tick charts at some point, but this was the Globex Open last night. This was the first pullback, and as you can see here, we have green line on the bottom and the blue line just above that 50-yard line, so the slingshot would in fact support a trade there.
Yep.
And then we have maybe not picture perfect here, and then we have this which did continue, and let's see, should be able to go to this chart. So this goes back into the holiday Monday, but as you guys always hear me say, the pullback holds more often than it doesn't. Here's a case and a case and a case and a case and a case, and down here you can see that old red and blue is up at the top, and on this little pullback here we've got the green line down below the 50, and then again we've got the green line down below, green line down below, green line down below, green line down below. Now we know that not every pullback is going to hold. We just know that it holds more often than it doesn't. And so we had a leg and a retracement, leg and a retracement, leg and a retracement, leg and a retracement, leg, and then a deeper retracement. And then we had the Globex Open. And so we initially caught a leg to the upside. We pulled back to the BBC, which we expect to hold. And the slingshot supports that. Now, actually in this instance, yeah, it does. It does support it right here. Then we get the bearish cross. So we had a bearish cross, we had a bullish cross, we had a bearish cross. And this one, you got red headed down at a pretty good 45-degree angle. And then on this pullback here, the slingshot supports that as well. And so that's the chart I was talking about in the workshop. Would like to see price pop up to 43.44, 43.4250 short on a stop. Finally took an entry. unless it pops up first. Would prefer selling at a higher price. Now here I noted that it never popped all the way up this time, but then in the very next chart we can see that it did. See, we have these 3 candles here, and then this 4th candle finally reached up and finally did. And then after finally...
Is that a 5-minute chart, Dwayne?
No, that's tick chart.
Oh, is it a tick chart?
Uh-huh.
4th range.
And then this is a 30-minute chart,
Okay.
where the 38% fib was holding as support. Price was below the BBC. And at this point here, I said if short, consider taking profit. And as we can see, the slingshot again supported this pullback. And I think that's the last one that nope. Then I showed a counter trend trade on crude. That's another topic. And then we started to build this candle here. So I said, here we go again. Eventually it won't hold, which opens the door to possibly buying the dips again like Friday. So we had 3 legs down so far. 1, 2, 3. And then I do believe after I walked away from my desk. So there's those 1 hour to the London Open. Oh, and then I highlighted the 30-minute BBC on this tick chart, but the 30-minute BBC was at 43.43. And so there's that last pullback. If short, I said consider taking profit again. The average volume was 700 contracts per candle on this particular tick chart. So if you guys have missed the workshop last Thursday night, this is kind of an example of what I was talking about. So those of you that are members can of course go to the workshop channel. And then 43.38 was the 62% fib on the 30-minute chart. And I think that's the last thing that I posted in regards to that. So anyway, I just want to show you that, Michael, and I'll send you over some more information in the boardroom so that you can, in fact, there you go. I just, that'll clarify everything for you right there.
Yep. Okay, good. Did you see how to work that thing that I mentioned to you?
No, I haven't had a chance. I kind of, but I do need to. I need to go back and read your instructions, and then I need to go to work on that. So, but thank you for doing that. Okay, guys, Logic 247. Okay, now the way it works around here, Michael teaches you 2 hours a day. Michael and Valerie, every day for 2 hours. Our methodology, our strategy. You get to watch trades being put on and taken off and managed in a live environment. Okay, as price is flowing. As you're learning the methodology and the strategy, we invite you to, of course, ask lots and lots of questions. The closer you follow what Michael does, and by following him, I don't mean trying to match him tick for tick, but understanding what he's doing and why he's doing it. When he gets long or gets short, there's a definite call to action based upon the rules. What you see in the live training room is a rules-based methodology. The Logic 247 alerts, that's a discretionary trading methodology. However, our discretionary model is built off of the underlying principles of everything that you learn in the live training room. The only difference is the time frame. In the morning we use a fast chart, so you get to see lots of trade triggers. The alerts are based off of a 30-minute chart. So if we use the 30-minute chart in the room in the morning, you might only get to see 1 or 2 trade setups over the course of 2 hours. Some days you might not even see any. Okay, so it's a whole different animal. Also, in the live training room, we use an 8-tick hard stop on every market, every trade, because Michael's teaching you the importance of always having a physical hard stop. With the larger time frame, 30 minutes, we use what's called market structure to determine where the stop loss goes on each and every trade. Now, I hear this again and again when I'm in a mentoring session with someone. So we always risk $300 on an alert. And the answer is no, we don't. We take a look at market structure. We allow the chart to tell us where the stop loss needs to be. If it's less than $300, that's great. It is what it is. If it's more than $300, then you move to step 2 of the 3-step process. If it's still more than $300, you move to step 3 of the 3-step process. And if it's still more than $300, then you just wait for another alert, or you wait for that alert to trigger again. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So, very important to understand the difference, but the principle, the underlying, everything under the hood is identical from the room to the alerts. Whether we're on a 4-tick range chart, or the 30-minute chart, or on the daily chart, which we'll go to in just a moment, price flows exactly the same, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Now, I also shared some other stuff last night in the discussion group, which I'll just cover real briefly here for you, because I did not do the CTAs last night, and so we won't be going through that long process of walking through each one of those. You've heard me say many times, everyone, that it takes money or financial commitment to move the market higher. Now, that's any market, whether it's crude or gold or the S&P, whether it's a 1-minute chart or an hourly chart. It takes financial commitment to move price higher. The second buyers stop buying, sellers come out of the woodwork and take advantage of the opportunity. There are traders, there are even hedge funds that they specialize in trading short. That's all they do. Now, trading in some markets can be, or shorting in some markets can be difficult. There's some rules in the equity markets. I'm not sure if the uptick rule is still in effect or not in effect, but it was for a very long time, which means in order to short, there's just a laundry list of stuff. That's not true with futures. With futures, you can be long and short in the same hour, as you see Michael do in the room, based upon whatever the chart in front of you is telling you at that moment in time. So using the ES as an example last night, okay, when the market opened, anyone who wanted to be long, and when I say anyone, I'm talking about every trader, great and small, around the world, who was actively engaged in the business of trading at that moment in time. When the markets opened last night, everyone who just was bullish and wanted to be long, the market opened, they bought the market. But not every buyer, not every long-minded individual bought the open. Because Friday we had a new all-time historic intraday high. So some traders chose not to buy the open. Some buyers wanted to see a break of that Friday high, the all-time intraday historic high, and then trade the breakout, as it's called. So last night, based on market structure, when the markets opened at 6 p.m. Eastern, buyers were confronted with 2 reasons to buy. The number 1 reason was just the market opened. Okay. Number 2, some were waiting to see if we would trade above the all-time historic high. My point, if we break the Friday high, and those buyers, every long-minded trader, great and small around the world, actively engaged in trading at that moment in time, then comes into the market, then what? Okay, so you got long-minded traders and short-minded traders. The market opens last night. Some people bought just because the market opened. Other traders were waiting to see if we could break that high on Friday. Now, if it were just Friday's high, it would be important. The fact that it was an all-time historic high made it even more important. Okay. But here's the deal. Once every trader, great and small, has entered the market for whichever one of those two reasons motivated them to be in the market, and I'm talking about the 1 contract trader all the way up to the 100 contract trader and more, every trader who wanted to be long is now long. Okay? So now what? Buyers stop buying. Why? Because they already bought. So you have to ask yourself, what happens when new money stops coming into the market? Buyers stop buying. Not because they're afraid, not because they're no longer bullish, but at some point, everybody's in. At some point, everybody who has any reason to be long the market, they're in. And so again, it's not about fear. It's not that they're no longer bullish, but they stop buying because they've already bought. Just like when you enter a trade, you know, once you're in that trade, chances are you're not going to buy any more until that particular trade resolves itself. Which, if you're on the range chart, can happen pretty quickly, but if you're on a longer time frame chart, it can take hours, could even take days. So, at some point, everybody's in. When everyone is in long, I'm just using that as an example, and there's no inflow of fresh capital, the market will enter the pullback phase. Traders who recognize what's happening will take profit, which itself creates selling pressure. If you bought to get long, then you have to sell to get out. At this point, those traders who look for these situations, and Mike Reed used to call it trapped traders, okay? When the market reached its high last night on the S&P, which was right here. Now, that historic intraday high I was talking about, 43.47 back on Friday. Last night we hit 47.75. Okay, so we only went 3 ticks higher. Now, I've always cautioned you about when you're dealing with a previous swing high or swing low, make sure that the market proves itself that it really wants to go higher. See, some people last night, they got long just because we went 1 tick above this previous swing high. And, well, we can see that did not end well. Okay? So, now, what happens is these people who bought here because we broke that high, the market starts to decline. These traders are trapped. They've already committed themselves to their long position. Price. So buyers stop buying because all the reasons for buying, for the most part, have been met, right? The market opened, we took out the high, you got people up here that are long and wish they were not long. And again, Mike Reed, in his book, Read the Greed, Take the Money, he called, his term for them was trapped traders. I've heard that term other places. I don't know if Mike coined the phrase or if he was simply using the phrase, but hopefully you get the idea, right? There's traders up here who are long for whatever reason and wish they weren't. Now, at this point, those traders who look for these situations, see, there's people like Mike Reed who would wait for just such a situation to occur, and then he would trade the short side. He loved trading the short side much more than he did the long side. Okay? So, at this point, those traders who look for these situations, trapped traders, will open new short positions. So you now have 2 things putting downside pressure on price. Those who bought the open are starting to take profit, some of them. And you have, when this breakout fails, those who are not committed to the market, or maybe you were committed long, but you exit, that creates selling pressure. And then you decide, hey, I should be short this market, not long this market, because price, in our case, we know price is now back below the BBC, and when price is below the BBC, we anticipate lower prices, which is exactly what we got. Now, those traders who did not take profit at the high, okay, will either be stopped out or they'll reach their maximum pain point and just take themselves out. So now all the traders, great and small, in the market at that moment in time are now divided into two camps. Those who made a profit buying the open or somewhere along the way, and those who did not make a profit. Those who made a profit will be looking for a place to re-enter the market long. Those who did not make a profit now have to decide if and at what price are they willing to make another financial commitment. Remember, it takes financial commitment for price to rise. As stops are triggered, and this isn't about running your stops or any of that stuff. Okay, that's just a market. That's not what I'm talking about. I'm talking about people who go long. If you're a trader, you have a stop loss. And if you're long and price starts to decline, depending upon your risk tolerance at some point, you just simply get triggered out because price went against your position. It doesn't have anything to do with anybody running anything. Okay. Now, as stops are triggered, price will eventually level out and consolidate, typically at a weekly trading zone or the BBC. You can watch for signs that the flow of money into the contract you're trading begins to slow. Price will begin to walk sideways. The candle themselves may become smaller unless you're on a range chart, because on a range chart, every candle's the exact same height. Once price starts to walk sideways, if it's an extended move, the step line will cross blue and climbing. Price will then begin to revert to the mean, which is the BBC. Price always reverts to the mean. Now, what I just described is a counter trend trade. Nothing wrong with a counter trend trade as long as you understand you're trading against the current trend as defined by price, the BBC, on a 30-minute chart. Over the last 152 weeks, we've issued 7,719 Logic 247 alerts at the time I posted this. Every one of the 7,719 trades is a trend trade. Had I been posting both counter trend trades and trend trades, we'd have over 14,000 alerts over the past 152 weeks. Again, if you choose to trade against the trend, just be aware that's what you're doing. The goal is to provide those of you learning how to trade via the alerts with the highest probability, lowest risk opportunities that the market makes available. Once you become proficient at trading the trend trades, then, of course, if you want to also add to your repertoire trading the counter trend trades, you can certainly do that. It's just important that you know the difference between the two. If you're new, you should stay in SIM until you've accomplished the first goal as laid out in the 2420 blueprint. Never trade an alert just because it's an alert. You typically have at least 20 minutes from the time the alert is issued until it triggers. Study the alert, study the chart, see the opportunity, and then trade in SIM until you've put together your 10 consecutive days in a row where you reach your goal. When an alert comes out, you look at your chart. If you don't see the opportunity, if you don't see that window of opportunity, then you should be asking questions. If you're in the room, ask there. If it's any other time of the day or night, post the question in the discussion group. Never risk more than the maximum profit potential on any alert. Use market structure as taught and allow the chart to show you where the stop needs to go. If the chart requires more than a $300 stop loss, go to step 2, then step 3. If step 3 requires more than $300 per contract of risk, then you just don't take the trade. You wait. 70 to 75% of the time, price will return to the trigger, often multiple times. and offer another opportunity with its own unique risk based on market structure. We cover everything: S&P, Dow, Russell, NQ, crude, gold, silver. You only need one good setup a day on one market, and the markets are open 23 hours a day from Sunday night at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern. Some days it will require more than one trade to reach your daily goal, as it did for Michael today. Using an ES commission of $5.85 per round turn, that's the getting in and the getting out. If it takes you 10 trades to make your 2 points, you're still profitable on the day. $41 is your profit after commissions. If you've earned the right to trade 10 contracts per the blueprint, and it still takes you 10 trades to reach your goal, then that $41 becomes $410. Some days it's one and done. Some days it may take 2 trades or 5 trades or 7 trades. It takes as many as it takes. However, if it consistently takes 10 trades or more to reach your goal for the day, then you should be asking more questions during the 2-hour daily class. 2 ES points, as everyone knows, is worth $100 per contract. The 2420 blueprint will notify you when it's time to add the next contract. Only add one at a time, and only add with profit you earned in the market. Those same 2 points are worth $1,000 once you've earned the right to trade 10 contracts. So take it slow and be patient. And this chart right here, well, we've already got the chart up there, but it's just this chart. This is why we wait to make sure that a new high holds. We took out the Friday high by 2 ticks. Actually, it was 3 ticks, not points. Those who traded the breakout without waiting for the pullback to hold are now trapped. A pullback to the BBC that holds should keep you in the trade. Our ES alert has not triggered yet because our ES alert on the long side was above the Friday swing high. If the pullback to the BBC fails to hold, we'll issue an alert down to the weekly trading zone. A close below 43.40 opens the door for a move down to the weekly trading zone at 43.28/29. We had one obstacle in the way right here at 43.33. So what we were talking about is you get a close below the BBC, take out that little low there, and there's a window of opportunity to be short with potential support at 43.33. If price trades through 43.33, then you've got a continuation of that window all the way down to the zone at 43.28/29. Now on Sunday nights we're using last week's zones, and so that zone is from last week. Okay. If the pullback, I covered that. Okay. However, we assume the pullback will hold until proven otherwise, and ultimately it was proven otherwise. Never make a financial commitment until after the market confirms its intention. Based on 7,719 alerts over 152 weeks, we know the market will not make the anticipated move once triggered 20% of the time. This week, starting the week off, it's a rough start. We've got more than 20% stopped out. Okay, we've had that happen a couple of times here over the last couple of months because of where the market is, up at all-time highs, and we've had this sideways consolidated trading. Very quiet so far with the long weekend winding down in the US. Perhaps London will bring some fresh energy at 3 a.m. Eastern. Be sure to check your news feed to see if there are any high impact reports due out tomorrow morning at 8:30 or 10 a.m. Eastern. We stand down during the news. Why is tonight's high 43.47.50? Because no trader, great or small, was willing to pay 1 tick more. I'm sure that somebody has a really expensive algorithm with thousands of lines of code that can tell you the exact same thing, except the answer will be far more complicated than the simple truth. It always is. Okay? And so, we can see the open was $1,800, right there. That little doji was the first candle last night. So this separates Friday or Monday. There actually was a Monday session. This was the opening candle. This was the opening candle on July 4th. We need the opening candle on July 5th. Today's the 6th. So we're looking for 1,800 right there. Okay. July 5th, 1800. That was the opening candle. So let me put another line right there. So that separates the holiday from today, the Tuesday session. Again, I put alerts out last night, but I did not put the CTAs out last night. So this is just an old CTA. But we can see what happened. That CTA came out Thursday night for the Friday session, and we consolidated for hours at the CTA, which acts an awful lot like a weekly trading zone, except you think of it as a daily trading zone. We consolidated for many hours. Then we made the move to last week's highest weekly zone, 43.28.29. And so over the holiday and today, we are above last week's highest weekly trading zone. We've now dropped below that trading zone, 28.29, and this week we have a weekly zone at 43.31/32. So I'll get all these zones updated on the chart for tomorrow, but early in the week, Sunday night into Monday into Tuesday, the previous weekly zone still holds sway over the market, especially in flat consolidating type markets. Sometimes they barely change. But going into the close on Friday, July 2nd, we had a nice rally. We traded through the weekly zone, and we put in this all-time historic high intraday. So we got a high, got a lower high, we got a lower high. Okay. Now the next zone on the way down is going to be 43.17/18 for this week. 43.17. So that's what the market has been dealing with here for the last few hours. When price drops to a weekly zone, which again is 43.17/18, only three things happen at a weekly zone. Consolidation, most likely, 70-75% of the time. Rejection, 20-25% of the time. And then the slice. Okay? So price has come down to the new zone at 43.17/18. And it's been consolidating for 1, 2, 3, 4 candles. Okay? Price right now is just below. We're at 43.15 half. Call it 43.16. We're at 43.16. Now, we're printing a green candle. We're below the zone. In fact, we're right at the zone. We've got 3 reasons to anticipate further downside movement. Price has pulled up to the weekly zone, 17/18. Price has pulled up to the step line. Price has pulled up to red and falling. Any one of those 3 things, individually, we expect to be good resistance. So this is what we refer to as resistance times 3, because we have 3 reasons. Doesn't mean the market can't shoot higher, because it can. But we've got 3 separate reasons why this may be potentially good resistance. And this 43.13, again, just ignore that because that's not last night's weekly trading zone. In fact, I'll just move it up I'll use it again tonight when I drag it into position for tonight's zones. So we've got a leg, got a retracement to the zone, and right at the zone we put in a doji, and then we get a leg, a retracement, and now it's like waiting for the next shoe to drop. 43.13 down to 43.11. There's 2 points. 43.13 to 43.11. And then there's potential support at these lows. Call it 43.08. And then here's last week's zone, 93.94. And this week, the next zone down is 42.93/94. That zone is actually the same this week as it was last week, 93.94. Sometimes that happens. Okay. So window of opportunity here. Price takes out that low. Then additional opportunity down to the zone, and right before you hit right at that zone 93/94, you've got this bullish cross. When we have a bullish cross that leads to an extended move, the first time price revisits that area, okay, in most cases it will act as good support on the first move. Now, what if price doesn't drop here? What if price walks sideways? What if the step line crosses from the left side of red and falling to the right side of red and falling? That's an indication that price is going to most likely attempt to pull back to the BBC. And again, pullback holds more often than it doesn't. Doesn't mean it's always going to hold. We know that there has to be times when it doesn't hold. Otherwise, we'd end up with a sideways stagnant market. But just knowing that it holds more often than it doesn't should help you develop confidence in your definable edge. And that's what Michael is teaching you every day for 2 hours, is our definable edge. It's all rules-based, mechanical. The criteria to place a trade either exists or it doesn't. And so some would say, well, why not just go short right here? Well, because the market hasn't given us any clear indication yet. This candle's only 4 minutes old. Is price going to go down to test support and then potentially drop further? Or are buyers going to come in and rally us up to the BBC? If that happens, well, we expect that to be good resistance. And that would give us an opportunity then to be short from a higher price. Okay. Now, let's go to the daily chart. That's where we typically start out. All right. Now, we're going to have, it looks like, a bullish engulfing candle of yesterday, the holiday. We have a higher high than yesterday. We have a lower low than yesterday. And we also have a doji. Now, the market doesn't always turn at a doji. Sometimes a doji is just a continuation signal. But at most major reversals, quite often you will find a doji. And it's sort of like weebles wobbles, but they don't fall down. So the fact that this is a holiday, we can't give it quite as much weight as if this was Friday's candle. Now, the high on Friday, 47. Today's high, on the daily, I'm actually showing that as 48. Okay, so that was actually, let's go back to the 30-minute chart for a second. At some point in here, we must have hit 43.80. Yeah, right there. On that candle at 20:30 last night. So we took out the all-time historic intraday high by 1 point. I first thought it was 2 ticks, 3 ticks. Turns out it was 4 ticks. Okay, but in a big picture perspective like this, I want more than a point. In fact, the Logic 247 alert was to get long at 43.49. Okay, and the high was 43.48. So we do in fact have a bearish engulfing candle. If we close on the low of the session, as you can see, we're off the low of the session. The low Friday was 43.08. Today's low is 43.05 and a quarter. So we've traded above Friday's high by 1 point. We've traded below Friday's low. Now, the further down this red candle closes, like if the body, works its way back to the low of the session, then that is one of the most important candlestick signals in regards to a reversal. The last time we had a bearish engulfing candle right here. As you can see, on this day, the high was higher than the previous day. The low was much lower than the previous day. And that led us, that bearish engulfing took us from like 41.67 down to, that's what I don't know, 150 point drop, something like that. Okay, that's a very, you don't have to memorize all the candlestick signals. There's over 200. Don't even try. In the little PDF we give all our traders, The Secret Life of Candles. The bearish engulfing is covered in detail. Now, you don't see it that often on a daily chart, but on smaller time frames, you will see it, okay? And so watch for that. If price were to close right here, right now, it would still qualify as a bearish engulfing candle. If we close on the low of the session, that's going to put us below blue and climbing. That's going to put us below the step line. And that gives us a big picture window of opportunity. From roughly 4,300 down to 4,270. So that's about 30 points. Now, everything we do, everything we teach is fluid across all markets, all time frames. So just as the pullback, we expect it to hold, above and beyond that, price always reverts to the mean. In our case, the mean just happens to be green. Okay, and so we take out these two support areas. There's an extremely high probability that price is going, it may not go in a straight line. It could, we could get a leg and then a little bounce and then a leg, but price always comes back to the BBC. Here and here and here and here and here. Okay, now it's been a while since, look at how long it's been since we had a red daily candle of this size. Now the day's not over. I mean, the market structure could change. Buyers could come in and drive this thing back up to the high. You have to embrace all possibilities. But we had one out of the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading sessions. There was only one small red body candle. That's definitely the definition of a trend. Okay. And the little holiday doji, which is, we kind of just gotta ignore that. I mean, it really happened. The market was really open. The trades really were, placed, etc. But this is important. Okay. The world is watching this. Now, we use a 4-tick range chart. Very few hedge funds or institutions or anybody else is watching a range chart. But that's what we built our methodology and strategy around, that fast time frame, because it makes it simpler to teach the strategy to folks when they can see lots of trade opportunities every day, one right after another, as you see Michael do every morning. Okay? But the world is watching the daily chart. the institutions, the banks, the deep pockets, okay, they're seeing this. Now, I used to think that I needed to find something that nobody else knew about. I needed to be able to see something that no one else could see. And I really worked hard at that, for a while. 2005, 2006, 2007. And I eventually realized the error of my ways. Because if I'm seeing something that nobody else can see, how can I know what other traders are going to do? How can I know what the next high probability move is if I'm looking at something different than the rest of the world? Well, the answer is you can't. It's important to look at the most popular time frames, not because I'm not saying you're going to trade off of the daily or the hourly or even the 30-minute, okay? But you have to know that the big money, the smart money, whatever that is, they're watching these big time frames the way we watch the smaller time frames. So every hedge fund in the world sees this bearish engulfing candle. So what do you think they're starting to think? Wow, bearish engulfing candle in perfect context. Context is very important with candlestick signals. Candlestick signals are nothing new. They've been around 400 years. Japanese rice traders created them. How many hedge funds right now are going, wow, what a beautiful bearish engulfing candle in perfect context. I think I'll buy the market. I'm not saying nobody's going to buy the market. People will find reasons to buy the market, especially intraday, okay? But I'm talking big picture here. We're on a daily chart. From where we sit, if the market closed right here, right now, I would anticipate a move lower when the markets reopen tonight. That would be my anticipation. Now, once you understand how price flows and once you're able to read a chart, once you've learned what the next high probability move is and how to spot it, we know that 20% of the time that doesn't happen. Over the 7,000, however many alerts I said it was over the last 152 weeks, on any given week, 20% on average do get stopped out because the market fails to do the next high probability thing. Market can only do three things. It can go up, it can go down, it can go sideways. Okay? Once you've been with us a little while, you should be able to look at a 30-minute chart and in 20 seconds know what the market's trying to do. If it's above the BBC, it's trying to get to the zone overhead. If it's below the BBC, it's trying to get to the zone below. Does it always accomplish what it sets out to do? No, not always. Does order flow shift sometimes in the middle of a trade? Yes. We get into long trades because there's more buying pressure than selling pressure in the order flow. We get into short trades because there's more selling pressure than buying pressure in the order flow. Where's the most pressure now? Well, we got a red candle. We are off the lows, so there's a battle taking place right here between buyers and sellers. Okay? How will it end? How will we close? That's a great question. But now you understand the importance of where we close, how we close, and what to anticipate going forward. Now, I just did all that dissection on a daily chart. But everything that we do is fluid across all markets and all time frames. So with a 30-minute chart or an hourly chart or a 4-hour chart or a 1-minute chart, everything I've said, it just transfers from one to the other. If sellers stay committed, if buyers stop buying, if price drops to the BBC, and eventually it will because price always reverts to the mean, then we expect that to be good support. at least on the first trip down. And when we hit that daily BBC on a big time frame, almost always gives us a nice bounce. Like this pullback here. Took us all the way up to here. And then this pullback, although we spiked it real good, look at that bounce. Okay, now we've got to adjust our fibs to compensate for the new high. Okay. Now, this fib is the entire move up that began November 2nd. The shallowest possible Fibonacci retracement, the 24% fib, is down here at 40.83. That's the move that began November 2nd up to today. Now, the last leg up, okay, the 24% fib retracement on that is right here, just above the daily BBC. So this is an area of confluence. So we have two, if price were to just fall out of bed right now, okay, we got two reasons why this, actually three reasons why this should be potentially good support. The daily BBC, the 24% fib of the last leg up, and the 62% Fibonacci price extension. Okay, we've overcome this lower trend line, this upper trend line from way back here in April. Okay, it intersects with the 100% Fibonacci price extension. Fibonacci price extensions are different than retracements. It's the same golden ratio, the same 14th century math, but the price extensions are projecting into the future where price may find resistance. Okay, like here at the 50% Fibonacci price extension, we consolidated for a couple days, and then we got to the 62, we consolidated a couple days, and now we're spitting distance from the 100% extension up at 43.62. High of the session, 43.48. Okay, so we've already looked at the S&P. Okay, here was that window we drew. We talked about the potential for price as opposed to dropping here. Okay, buyers taking us up to that weekly zone, to the BBC, which we expect to be good resistance. That would be a counter trend trade. 43.22 up to 43.26. The reason I only put trend trades in the Logic 247 channel is because in my own experience I found that they have a higher probability of completing. And when we're trying to teach someone new how to trade, that's the purpose of the alerts. The purpose of the alerts is not just so you can become a member and trade the alerts and make money. You know, of course you're welcome to do that, but the bigger idea, the bigger picture is that you learn how to spot these windows of opportunity yourself. That's why I build at least 20 minutes into an alert before it's going to actually trigger, so that you have time to study the alerts, study the chart, and go, ah, that's a window of opportunity. Well, the next time I see that, I'm going to recognize it. And as you repeat that process over and over, again and again, over and over, again and again, pretty soon you're seeing the window of opportunity before I even send out the alert. And then you take everything Michael taught you in the room, the methodology, the strategy, the underlying principles, and then you apply that knowledge to the window of opportunity that I've taught you how to find via the structure of the market. Okay, so we already talked about the two windows to the downside. There's a counter trend window of opportunity to the upside, And while I very well might put this or all of it in the alert channel, I won't put this. Doesn't mean it's wrong. It's not illegal, immoral, or fattening. It just doesn't have the same degree of high probability as the trend trade. Okay? But again, once you learn to trade the trend trades, if you choose to add counter trend trading to your repertoire, well then by all means. Okay? It's your trading business. You get to call the shots. You get to make the decisions. So, the Dow. We opened last night. 1800 hours. Right there. That green candle. These are last week's zones, last week's CTAs. So, what happened? We opened and we ran into resistance, the CFMA1, the red and blue line. I refer to it as blue and climbing, red and falling. And when it's flat, it's really not anything you want to have anything to do with. So by 1 a.m. Eastern, price had managed to close below the BBC. BBC stands for bull, bear, cross. Above it we're bullish, below it we're bearish. For whatever time frame we're looking at, for whatever market we're looking at. We're looking for price to pull away, price to pull back. We expect the pullback to be resistance. It was. And that dropped us through last week's zone at 34,570. And then it dropped us to the next zone at 44.50. And then it dropped us to the next zone at 34,300, where we consolidated for several hours. Now, buyers have come in, running it up. Where will they run out of commitment? Okay, remember, it takes financial commitment for this green candle to keep rising. If buyers, for whatever reason, stop buying, maybe because they already bought, if there's no fresh money coming into the market, this thing will start to drop. Okay, and so is this a counter trend trade opportunity? It is. I just won't put it out as an alert. You know, 34,400 up to 430, 450. Okay, that's a window. If we get above that old zone from last week, then we got another little window here. If buyers run out of steam and price starts to deteriorate, then we have a window of opportunity here and then here. And again, these are still last week's weekly trading zones. Okay. All right, Russell. Last night the open was right there. So we traded up to the weekly zone on the Russell at 2310, consolidated. We had a flat CFMA1. Okay. Price pulls back to the BBC. It's a long time for all this to happen. Then we finally closed below the BBC. We've got red and falling overhead. So we get a leg. We get a retracement. The pullback holds. And we drop down through that zone. Down all the way to 2250. Big down day for the Russell. Let's scale it a little bit different so you can see it. Okay. Opening candle, sideways, bearish cross, leg, retracement. And as price took out these lows, that created a nice window of opportunity down to the zone from last week at 84/85. Now the zones go out to all of our members Monday morning at 6:15 a.m. Eastern. We've been publishing the zones since December 14th of 2009. And so this zone, even though it had been a week since this zone was published, you can see what happened. Price so early in the week, Sunday night, Monday, Tuesday, the old weekly zone still holds sway over the market. As the week progresses, the new zones start to take hold, and then occasionally we'll find a zone that becomes an important price, important area for a period of weeks. Whenever you see a yellow weekly zone on the chart, you know that's from a previous week. So the Russell from here will do one of two things. Buyers will run us up to potential resistance at the BBC, or buyers will throw in the towel. I mean, they'll only spend so much time and so much money, and then they'll just back away and let nature take its course. Now, the lowest weekly zone last week was this one, 2284/85. So we're below last week's lowest weekly zone. And from where we sit right now, 2250, we only have one more weekly trading zone on the Russell to the downside. It's early in the week. It's difficult to publish the zones when you're staring at that, but I've learned over time the zones hold. Once they're published Monday morning, they're carved in stone for the entire week. We don't change them in any way. So does that mean that price will now go to the lowest weekly trading zone? It may or it may not. What we don't expect is we don't expect price to close above the highest or below the lowest by the end of the week. So, we could potentially trade below the lowest zone, but then by the end of the week, we would expect it to be at the zone or above. Okay, NQ. NQ opened last night, right here on that candle. So we were above, and we were below, and we were above. Okay? When you see that on your 30-minute chart, that is not a market conducive to trading. As price started to rise, and we took out this high, getting along in this area, 733, took us up almost 60 points at $20 a point. That's $200 per contract traded. When the move ran out of steam, because nobody was willing to pay $14,791, we closed below the BBC. We got a leg. We got a retracement. We got red and falling overhead. The next high probability move is to the downside. 20% of the time, the next high probability thing just doesn't unfold because order flow switches from bullish to bearish or vice versa. If this becomes the good resistance that we anticipate, we're going to get a new candle here in about 5 seconds. We want to see red. Okay. Now, one of two things will happen here. Price will trade back below this swing low and give us an opportunity to trade that window of opportunity. Or buyers will stay committed. Remember, it took financial commitment on the part of somebody to make these two green candles happen. If they stay committed and get us back up into this area, then we have a window of opportunity on the upside. Okay. Too early to say now. We want to see what happens right here. Okay. So roughly 14,690. Yeah, to 14,670. That's conservative. From 90 to 70. It's 20 points at $20 a point. $400 per contract traded. Now, the other option is, you could short it here without any additional confirmation, with a very minimal risk, just above. You enter into a trade like that almost expecting it to fail, but you say, you know what? I think my definable edge is strong enough that I'm willing to risk X points, because the sooner you enter, the less risk required. We all want confirmation. That's why I said let's look for a break of the low of this candle, because see, this candle, when it opened, it was red. It tried to go down, but then buyers came in and pushed it back up. That's why I want to see if these guys here are still as committed as they were. Okay, so window to the downside, window to the upside. As futures traders, we don't care which way it goes. If the market moves up, we're happy to be long. If the market moves down, we're happy to be short. If the market moves sideways, which it does sometimes, we prefer to just be flat. Okay. Window above, window below. Patience required. You've got to let the market prove itself. Either the sellers will prove that they're more committed than the buyers, or the buyers who created these two green candles will prove that they're more committed than the sellers. Okay? So this window to the upside, 730 up to 750. So you got 20 points down here, 20 points up here. $20 a point, $400 per contract traded. Okay, crude oil. Bearish cross, and crude just fell out of bed. All the way down to 73 bucks. That's last week's zone. We got another zone below at 72.40. The step line has crossed. Price has walked sideways. Question now, will buyers remain committed and take us up to the BBC, which we expect to be good resistance, or will they throw in the towel and give us an opportunity to trade, say 72.80 down to 72.60? If they do, that's a $200 per contract opportunity. On gold, we're sitting right on top of last week's zone at 1792/93. The market opened last night right here. We caught a leg up to the zone from last week, 1800/1801. We pulled back to blue and climbing, found good support. Traded back up to the weekly zone, got above the zone, put in a swing high here at 1815. Price pulled back to the BBC. This time it didn't hold. This time dropped right down to the zone at 1792.93. We're printing a red 30-minute candle. So if we take out these lows, then that opens a window of opportunity from roughly 1789 down to 1787. Got to take out these lows, entry, 2-point move to potential support. You could be done for the day if that's how it unfolds. And last, silver. Big down day for silver. Market opened last night right there. Quickly had a bullish cross, caught a leg, a retracement, a leg, a retracement, a leg, a retracement. And then we reached up one last time to put in a high at 26.91. Then we traded below this low. Traded below this low. And so our windows of opportunity for silver are on the downside. 26.15 down to 26.13. It's 2 pennies, $100 per contract. And that brings us all the way back around to the daily chart. Sitting right on top of that old trend line. But the real support is the step line in blue and climbing. Do they hold? If we continue with the red body, the lower the red body closes, the more powerful this bearish engulfing candle becomes. And which ultimately may lead us back. Well, ultimately we will go back to the BBC because price always reverts to the mean. Again, in our case, the mean just happens to be green. So there you have it around the world. Good word for the day. Friday we talked about putting self on the altar. Today we'll talk about how our words reveal our heart. Matthew 26:73 says, your speech betrays you. The full scripture says, after a little while the bystanders came up and said to Peter, certainly you too are one of them, for your accent betrays you. The words you speak will give you away every time. It happened to Peter. On the night Jesus was arrested and all his disciples scattered, Peter stayed close enough to see what was happening, but not close enough to be identified as being a follower of Jesus. The Bible says, those who stood by came up and said to Peter, surely you also are one of them, for your speech betrays you. Then he began to curse and swear, saying, I don't know that man. And immediately a rooster crowed. And Peter remembered the words of Jesus, who had said to him earlier in Matthew 26:73, before the rooster crows, you will deny me 3 times. So Peter went out and wept bitterly, because the very thing Jesus had said would happen, happened. After that episode, nobody there accused Peter of being a follower of Jesus. He stayed undercover. Isn't it interesting how profanity in any language has a way of making others question the quality of your relationship with Christ? Your words have the power to build people up or tear them down, draw them to Christ or drive them away. With that in mind, here's 2 scriptures that I think you should make note of. Colossians 4:6. Let your speech always be gracious, so that you may know how you ought to answer each person. Number 2, Ephesians 4:29. Do not let any unwholesome talk come out of your mouths, but only what is helpful for building others up, that it may benefit those who listen. So today, here's a prayer for you to pray and for me to pray, for all of us to pray. Father, may the words I speak this day bring credit to the name of Jesus and draw others to him. In his name, I pray. Amen. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.